Finally, banana zone, when banana, right? Okay, let's stop again. Last three Bitcoin RSI oversolds. We just had that correction. Number go up, right? This is the chart I keep reiterating. They just don't understand the chart. Where's the banana zone? Well, it's like it's in the middle of the goddamn banana zone. It's been happening. Phase 2, before we have the correction phase. The correction phase will be when global M2 traded sideways because of the dollar correction. It's telling me that July, August might be a sideways move. And whether you want to take some lifestyle chips off the table, because I know a lot of you are freaked out. Is this the end of it? Oh my God, this is a stunted cycle, diminishing returns. It's terrible. Again, it'll all be wrong. I'm going with the banana zone. I got my 3 banana stripes. That makes me like super senior in the banana world, enough that I can call the president on the banana phone.
Raoul Pal declares we've entered crypto's banana zone, a phase of parabolic price growth where Bitcoin could see its most explosive rallies yet. Despite recent volatility, he argues this is normal mid-cycle action before the true acceleration begins, driven by institutional inflows and global liquidity trends. Pal's advice for this phase is simple. Hold tight through 30 to 40% pullbacks, avoid leverage, and keep coins in cold storage. He rotates between outperforming assets but stresses Bitcoin remains the core holding, calling it the greatest asset ever conceived, for outpacing currency debasement. With adoption accelerating faster than any asset in history and institutions treating Bitcoin as digital gold, Pal sees this cycle smashing all record. His thesis aligns with bold predictions like $1.5 million Bitcoin by 2030, as crypto becomes the hedge against failing traditional finance systems. The message is clear. Stay patient through volatility. The banana zone rewards those who hold.
Crypto's at all-time highs, and I'm vindicated because I told you so. What happened in 2017? Last time we went through the same machinations of we're all going to die, Trump's going to ruin the world, and nothing actually happened apart from the markets, crypto, tech, equities, everything just went to the moon. I will guarantee at correction phase 2, I'll be overwhelmed by people losing their shit. It's peaked. I've told you it's peaked. It's all over. It's never going up again. We didn't get the full banana zone. Oh my God, this is a stunted cycle, diminishing returns. It's terrible. Again, it'll all be wrong. Everybody becomes a macro expert. Everybody becomes whatever expert. And there's a lot of good experts there as well. Generally speaking, Trump and Bessent have said, we want bond yields lower. We want oil lower. We want the dollar lower. Those two things they've had, but bond yields haven't. And then there's a bunch of 1970s gold bugs saying, it's inflation, it's coming back. It's like inflation is falling all the fucking time. And we've been proving this in this macro investing tool product that Julian and I produce on Real Vision, in Real Vision Plus, or soon to be Real Vision Alpha. The answer to higher bond yields is to inject liquidity in the bond market. By July, they will be using the SLR to allow primary dealers to hold more bonds. That is code for, hey, listen, you guys in the banks, stick bonds on your balance sheet, give some leverage out into the world, and hey, presto, new bars of bonds. Banks make money because they can lend it out. They were not allowed to do that post-2008. This is a big change. We've got the Basel IV agreement, same kind of thing, rolling out. Hey, banks, take our bonds. We'll make it sort of like it's cool to do so, and you should do it because it's good for you guys. It's the US government selling bonds. The US government, they're in the Middle East right now. Well, they were in the Middle East. They're not selling weapons. They're not selling AI. They're not selling data centers. They are selling bonds. The US is in the business of selling bonds. They have trillions and trillions and trillions, tens of trillions of dollars of these fucking things to sell. And so they have to go to the Middle East that has trillions of dollars to buy them, right? So Scott Bessent is a bond salesman. Donald Trump is a bond salesman. They're all bond salesmen. So anyway, so if bond yields get too high, Scott Bessent has already said, as the Fed have said, we will step in. We're getting to the point where Japanese bond yields are too high, US bond yields are too high, and the governments are going to have to think, what do we do about this? And they will find some mechanism to stuff it into the banking system or on the balance sheet of the central banks. Using something like yield curve control, they'll dress it up, put lipstick on a pig and call it something amazing, give it maybe a 4-letter acronym to sound even more amazing than 3-letter acronyms, and they'll sort out the bond issue. That is the benefit of being these gigantic countries and not a small emerging market. You can act like an emerging market and pretend you're not. And you can force your huge savings pools into these vehicles. So bonds, I don't think, are a problem because the reaction function from central banks is always, and in every case, to print more money. They've removed the left tail risk from markets. So I think they will solve it. Also, really, bond yields, 10-year yields, have been a pretty sideways range. Bonds, everyone freaks out about when they get to the top of the range, and then they don't. Now, maybe these break higher. If they break higher, answer is print money, stop that happening immediately. Because if not, you nuke the housing market, you nuke Main Street, and all of the things that you don't want to happen. So generally speaking, beg the Saudis, beg the Abu Dhabi, beg Qatar, buy our bonds, get the Chinese to do the same by agreeing a deal, get the Japanese to do the same, make sure the Europeans buy our bonds, and if not, stick in our own balance sheet because that's what we get to do because we're the US. Bond yields for since 2022, then everyone freaks out at the top, so the world's going to end, freaks out at the bottom, rates going to zero. Listen, the dollar is the largest, most important macro variable on earth. Nothing comes close. The dollar is 87% of world trade. It's how the US adds and withdraws liquidity to the global system. It's how all commodities trade. It is the big daddy. And what we had is the dollar had been in a very sideways range for the whole of 23, 24, 25. Then it started weakening. It got the most oversold. It got 3 standard deviations oversold. And it's somewhat bounced since. Now, why do we care about that? Because every time it does this, the 12-month gain after a drop of that magnitude is huge. We had it in 2015. The NASDAQ gained 18%, 35% in 2022, and back in 2020, 61%. Things like a weak dollar.
Bitcoin's fixed supply collides with unprecedented institutional demand. This perfect storm of liquidity injections, dollar weakness, and having cycle dynamics creates ideal conditions for parabolic moves, though Powell warns investors to expect and capitalize on 30 to 40% volatility along the way. The key to thriving in this phase? Maintain core Bitcoin holdings while selectively rotating into high-conviction altcoins showing real adoption. Powell emphasizes cold storage, zero leverage, and viewing pullbacks as opportunities, not threats, in what may become crypto's most rewarding yet turbulent bull run to date.
It always looks great because you see some guy on Twitter who's made 100x returns and he's done it in perps and he's done it. It's like, it's never going to happen. You are going to lose your money. Because rule number 1 is don't lose control of your tokens. Because really, you want to hold it from here and you want to be Jeff Bezos here, right? And he didn't lose control of his equity. You don't lose control of your tokens. So that's really vital. It's also, don't FOMO, because you'll find out you'll end up buying at peaks and selling at troughs. That's the emotional side of things. Also expect 30 to 40% pullbacks often and think of them as normal. And if you've got cash, that's when you buy more stuff. So it's like having this mentality. It's also be careful not to lose your tokens because you get hacked. So store them on a ledger system somewhere.
Yeah.
You know, keep a cold wallet. Just simple things like that will stop you losing your tokens, stop you, well, even you FOMOing in fear, selling out, panicking, or bull market buying too much. If you don't do that, you'll lose control of your tokens. Again, just don't lose your tokens.
The basics.
And just hold it from here. And in 5 years' time, it'll be here. And in 10 years' time, it'll be here. And people don't believe that's possible. But this is the gift that keeps on giving it. It's the same with NASDAQ.
Yeah.
Right? Tomorrow will be more digital than today. It's a simple fact. So will tech stocks over time do well? And everyone goes, yeah, but they crashed in 2000.
Right.
Okay, well, we had a massive bubble in tech stocks then. You pay back for a year or two, but anything you bought into that crash was Amazon, Google, App, all of these things did stunningly well. So people just have the fear of what's happened in the past, but we know this tech adoption curve is not going to stop. In fact, it's increasing. So the probability is, even if you have a bear market, which we had in 2022, it lasted 1 year, 9 months. 9 months, it bottomed out with liquidity, and it's been up ever since. Because I've run large diversified portfolios, big hedge fund portfolios with many, many positions. And what I found is, since I kind of discovered that everything code thesis about liquidity being the dominant driver, I realized there's one macro driver that drives everything. And then on top of it is the adoption of technology, whether it's crypto or tech. Those are the two mega trends. Nothing else outperforms the debasement of currency, which is 8% a year plus 3% inflation. So 11% a year is what you need to do to break even on your savings. And so you've only got two assets to do it, technology and crypto. And when I divide the NASDAQ by Bitcoin, it's down 99.97% since 2012. On every time horizon, it's underperformed. But they're driven by the same factor. 97.5% of the price moves of the NASDAQ are explained by global liquidity and 90% of Bitcoin. Yet the performance is so wildly different. So I don't even own any tech stocks. Yes, I have trade recommendations for people who do, etc. I don't own those. So now you've got the world of crypto. So then if they're all being driven by the same thing, what you want to choose is the fastest horse. Now that's not buying the meme coin that can go up 100x. What you're trying to do is look for what are meaningful projects being run by meaningful people with meaningful communities. So it's this Metcalfe's law idea, how many active users do they have? What kind of value are they creating?
The utility, if you will.
Yeah, well, it's the measurement of the entire utility of the network. Do people value the network? Do they want to build on it? Do they want to transact on it? Do they want to own it? And so there's not that many that really show this. You've seen some of the communities like Cardano has a huge lot of retail users, almost no applications. Bitcoin has both at scale. Ethereum has both at scale. Solana is earlier in the network adoption model, but it's got it at scale. Sui, arguably, very early, looks like it might get it. So then I played the dumb idiot. I kind of have a thesis in my head, and I'm just like, what does the chart look like? And so you start with the chart of Bitcoin. That's your benchmark. Is the asset that you think is the greatest asset ever conceived, the one that you want to own, is it outperforming Bitcoin or not? 99% of all tokens don't. Okay, don't own them. But once you find the one that looks like it will, okay, now it's interesting. And that's what I had. That's why I switched from Bitcoin to Ethereum in the last cycle. Then from Ethereum to Solana this cycle. Solana outperformed Bitcoin and outperformed Ethereum. And then halfway through the cycle, I realized the other horse in the race was going to be Sui, which was the ex-Facebook team built a blockchain. And I happened to be on the board of it, but it wasn't for that. It's because it was breaking out versus Solana, which was easily the strongest horse. I'm like, okay, this is the strongest horse squared. This is my bet.
Nice, interesting.
And so I'm pragmatic because, as you say, we don't know what will survive and what will do well. So I'm just pragmatically looking at kind of weekly chart time horizons.
Performance quite a bit.
Is it breaking properly? Have I got something to capture in understanding how it's going to move going forwards? I'm not interested in day by day stuff. Is it structurally looking like it's going to outperform? If it is, I'm going to hyper concentrate because then I don't have to worry about anything else.
Raoul Pal's Banana Zone signals crypto's most explosive growth period, where Bitcoin's scarcity meets surging institutional demand. Expect 30 to 40% volatility, but these pullbacks are opportunities in a broader parabolic trend. The strategy? Hold Bitcoin firmly, avoid leverage, and stay patient through turbulence. This cycle combines perfect macro conditions with accelerating adoption, potentially creating crypto's biggest wealth transfer yet. While altcoins may outperform, Bitcoin remains the essential anchor for portfolios navigating this high-reward, high-volatility phase. What's your Bitcoin versus altcoin allocation strategy for this volatile phase? Which indicator matters most to you in this bull run? Institutional inflows, on-chain data, or macro trends? Share your approach below.